50,000 subscriber level. In fact, we crossed it on Friday, August 18th. And to thank you, I want to give you 2 free events that are extremely valuable. More on that later. Let's talk about 8% mortgage rates. Let's talk about Jackson Hole. There's a lot of important stuff going on in our economy right now that we must pay attention to. And also, never forget, we must do the work. So again, folks, let's start with something that you and I have been chasing for 5 years. We've been trying to grow this channel one day at a time, one video at a time to 50,000 subscribers. We are now there, and I thank each and every one of you. The daily financial news is without question the most popular video on the channel, averaging 5,000 videos a day. So I want to thank each and every one of you for being here, asking your friends to join, subscribing. I know I produce a lot of content, but I do it all from a go-giver mentality because you never know what piece of advice or story will be meaningful. So let's talk about the 2 free things I want to give away. So first off, you know that I've created a second channel dedicated to the daily financial news. This live video will be shared with my team. They will splice it up, add content, and post it later today. On that channel, which I will give a link below, I'm going to give you access to 7 hours of content that you normally have to pay for. This does 2 things. One is it allows me to thank you. It allows me to give you something of value for being a part of my journey. Second, and I don't want it to be lost, my second channel needs 4,000 hours of watch time in order to be monetized. We are now at 1,900, so we need 2,100 hours of watch time. So what did I do? I found 2 events that total over 7 hours. So if 300 of you watch those 7 hours today or tomorrow, we will be at the magic 4,000 level. Now, what are these 2 events? First, there's the Legends of Real Estate. We got 4 amazing women to be a part of a show. We had Anna Kelly for an hour. We had Casey from Brick by Brick for an hour. We had the one and only April Crosley from Lazy Girl REI. And we had Alicia Merriman from Huntsville, Alabama. These ladies, one was a teenage mom, one grew up in Section 8 housing, one had a year-long flip, and one had to go to a new market to find investments. These ladies are crushing it, but they started by doing the work. You will find that 4-hour session well worth your time. And then second, a lot of you like the Avengers, Millennial Mike, Dion Talk, Matt the Lumberjack Landlord, and I. I also gave you a 3-hour session of the 4 of us responding live to questions, talking about debt equity, out-of-state investing, self-management, all of these important concepts. So I will leave a link below. You can go to my new channel, subscribe if you would like, and you will have access to those 2 events, 72 hours. I announced it on Saturday, but a lot of people don't watch the channel. So it is Sunday. You will have access until Wednesday to watch these events that normally you would have to pay $50 for. So again, $100 in free stuff to thank you for 50,000. And again, I'm going to get a lot of watch time. So go check it out right now. It will be amazing. So let's talk about the All In podcast. I don't know if you guys heard the All In podcast today, but near the end of the episode, David Sachs shares a personal example of exactly what I am trying to tell you was coming. So if you don't know, David Sachs, one of the All In members, he has a couple of commercial buildings. Apparently, one of his buildings has a $9 million loan that is coming due, and he has to refinance. David Sachs takes this to his bankers, and after much to do about nothing, the bank comes back and says, we will redo the loan at $2.3 million, and we will give you $6 million if you pony up collateral. Essentially, think of it as a margin loan. So now again, David Sachs, I'm sure he's worth hundreds of millions of dollars. He decides just to pay cash. He's like, hey, I'm going to cash in, refi this. I'm going to pay it off. I'll wait for rates to get better. But what I want you to realize just happened is there was an asset that one time was bankable or lendable with a $9 million limit, now at 2.3. Most people can't come up with $6+ million. Folks, the pain in commercial real estate, the pain in general partners, the pain that's coming to LPs is going to be nuts. It's exactly what I've been warning you about. That example is happening all across the country, and unfortunately, it has just started. The stress, the pain, the fear, it's just started. This is going to be a multi-quarter, multi-year thing. I've been trying to create a storyline for people to appreciate the nuttiness, the stupid, idiotic behavior in commercial real estate is exactly like residential real estate in the last crash. Short-term financing, variable rate debt, stupid leverage, bad assumptions. The idiots come off the sideline because they think they can't lose, and bingo, bango, explosion. It's going to be bad. Now, I always try to give you the silver lining, because if you were watching this channel, you were getting ready, right? You and I have been talking about, you know what, maybe now it's time to buy small resis or residential, wait for this blow up in commercial, and maybe we will do what I did in this book, One Rental at a Time. We will 1031 exchange out of a house into an apartment. I'm giving you my playbook. The All In podcast yesterday just highlighted how bad it's going to be. Think about being a novice investor, like your first syndication, your second one. You're not an operator. You're a financial engineer. You're not worth 9 figures. You're not even getting the $2.3 million loan. This is bad. But there's nothing. You're pregnant at this point. There's nothing you could do except learn the lesson. Hopefully, not lose everything. But this is going to be bad for some, but also amazing for others. How many of you have said, I wish I bought in 2010, 11, 12? We may have the opportunity to position into bigger stuff. Now, to be clear, as I've always said, the big stuff, that is going to the BlackRocks, Blackstones of the world. But you and I, we can go find the 10, the 20, maybe the 40 unit building. And that is okay for me. So again, the All In podcast, I think it was like the last 20 minutes, if you want to fast forward to that. That's where David Sachs tells a very important real life example. Watch out for that. 8% mortgage rates. Lawrence Yun, chief economist at National Association of Realtors, NAR, NAR. He is out saying mortgage rates are right at the upper end of their band, and if they break higher, we could see 8% mortgage rates. First off, a lot of us on this channel, we are already seeing 8% mortgage rates, right? Investors are half a point higher based on credit, based on LTV, all of that. Folks, as I have said many times, I don't care if rates are 10%. What you and I do in One Rental at a Time is we take the cost of capital that is available to us, we put it in our spreadsheet, and we write great offers. Folks, my opinion, again, we are going to see August sales, existing home sales, which will be reported in September, break below 4 million. Now, the question I have asked myself is how low could they go? Not necessarily in August, because some of August closings will actually be June pendings, but how low could they go in September or October if we are above 7%? 7% is the line in the sand. 7%. 6 is good, 7 is bad. I'm seeing it clear as day every day, and we are over 7% still. So how low can transactions go? So when in doubt, I go back to the 53-year spreadsheet, which all of you have access to. Go to onerentalatatime.com. The lower right corner, there's a box that says get the spreadsheet. If you haven't gotten that spreadsheet, I don't know what you're doing. That is the spreadsheet I consult for how low they can go. And right now, what it's telling me is it could go as low as 3.6 to 3. I want to make sure I get it right. Yeah, 3.5 to 3.6 million. So we're already roughly at 4 million. We could go all the way to 3.5 or 3.6. If we get to 8% mortgage rates, that's where we're going. So again, what does that mean for you and I? Well, our job gets exciting. We get to find out who the motivated. Let me ask you this question. I mean, just logically speaking, mortgage rates are 8%. You list your home for sale. Why are you doing that? Because you have to. You have a job transfer. You have a life event. You have something going on that says, hey, I need out. Well, this is going to be very much like 1981. 1981, rates were 18% or whatever they were. They still did 2 million transactions. Most of those had to be creative, had to be something like that. Or you took a lower price. And that's why I keep pushing seller financing. The 50-40-10 from Velocity Mortgage. Folks, it is time to get creative. Get a blended interest rate. Get 90% loan to value. Get out there. If you happen to be in Pace Morby sub 2 community, go deep. Go figure that out. It's not something I have ever done, but go nuts. It is going to be the time for creative financing. Right? Do it right. Protect yourself. All of that stuff. I don't talk about stuff I don't do. I've never done one, so hey, go. It's very clear who is the man in that area. But again, transactions could go as low as 3.5 to 3.6 at 8% mortgage rates. So again, do we get there? So again, best credit, all of that. Right now, I think we're at 7.37. Do we see reported daily by Mortgage News Daily? Are we going to see 8%? Again, a lot of us already are, but owner best credit, 20% down. I'm going to say no. We'll see. I know a lot of you think 8% are coming, so leave comments below. Will we see 8% mortgage rates, best credit, owner-occ? Yes or no? Leave a comment below. Let's get the comments going. Jackson Hole, folks. Jackson Hole meeting last August was a watershed moment. Apparently, Jerome Powell had his speech all written up that he threw away, and he wrote an 8-minute speech. In that 8-minute speech, as we talked about last year, I thought he said, basically, hey, rich guys, wealthy folks, I'm going to kick you in the nuts. You have had it too good for too long. Rates are going up. I don't know why you're not listening to me. And sure enough, over the next 12 months, he has taken rates up. Billionaire Barry is the one that we talk about seemingly every week as a perfect example of a wealthy guy who did not listen to that 8-minute speech. Billionaire Barry thought the good times would never end. Billionaire Barry got caught in a liquidity trap. He's had to sell homes. He's had to do this. He's had to do that. He's had to close mortgages. He's not living good because he didn't listen. So what might Jerome Powell say this Jackson Hole? These are the 1, 2, 3, 4, 5 things that I'll be listening for. First, I don't think it will be an 8-minute speech saying, hey, wake up. But inflation. My expectation is he will say something like, the fight's not done. He doesn't want to come out and declare victory. So my guess he's going to say something like, the fight's not done, we still need to be vigilant, blah, blah, blah. 2, will he talk about banking? He has to know that the banking crisis or banking consolidation is just starting. What happened with PacWest and Bank of California is the first of a long line of banks being forced to consolidate. Take 2 weak banks, shove them together. Hopefully you have one somewhat strong bank. Will he talk about that? Will he talk about commercial real estate? Again, I am of the opinion that most commercial real estate are not going to injure banks. They're going to injure equity. And the equity is LPs. It is owners of assets. Again, that unit in Houston that we've talked about endlessly, $100 million lit on fire in 11 months, and the bank took something like a $14 million haircut. That doesn't feel good, but it's not a $114 million haircut the bank took. The bank took 14 and the LPs lost $100 million. And potentially more because they're probably going to get an IRS tax bill for the bonus depreciation and all of that they had to, or I'm sure that many of them did. Interest rate cuts. I expect him to be no cuts coming, nothing planned, nothing on the horizon. We're a long way from interest rate cuts. And then finally, will he talk about more rate increases? Will he say something to effect of, yes, September is on the table? Or will he say, you know what, the data is heading our way, maybe September pause, but don't fear, we could do it again in November. So again, the things I'm listening for: inflation fight's not done, banking or consolidation, commercial real estate, interest rate cuts, and interest rate rises. That's what I'll be listening to. And he speaks on Friday. He does speak on Friday. Let's talk about GDP Now. Folks, go to the website. It's run by Atlanta Fed, GDP Now. I think it's gdpnow.com. I'm not sure about that. It might be .gov. But anyways, you can look it up. I don't think you'll be able to guess what GDP Now is forecasting for Q3 GDP. I saw this and thought it was fake news. GDP Now, which has been remarkably accurate. Let's give that platform its flowers. GDP Now was on point in Q1 and Q2. So when you got that close, in my opinion, you are worth paying attention to. Now I go to GDP Now. It says that the estimated forecast for Q3 is 5.8%. Let that sink in. The U.S. GDP growth for Q3 of 2023 is currently pegged at 5.8%. Folks, that is higher than China. China is estimated to be about 4%. I don't know for sure, but I can't recall a time when the U.S. GDP was higher than China. Not in my adult lifetime, anyway. So, a couple of things. First off, GDP Now is a collection of metrics that are reported almost seemingly on a daily basis. There is no question that in the next 6 weeks, it could roll over. In fact, I hope it rolls over. If we actually end Q3 and we post a GDP number over 5%, the Fed is going higher. They have to. That you can't have the U.S. economy growing at 5% and not spark inflation. So again, my hope is over the next 6 weeks, it'll roll over, which again, lots of metrics coming starting next week with new home sales and existing home sales. I expect those metrics to pull the number down. But again, we have to watch this. So what about Trueflation? Trueflation is, again, an online system that takes real-time metrics, not this legacy data that the Fed uses. Trueflation is currently pegging inflation at 2.6%. Better than the 3.2% last reported in CPI headlines. So again, all of these things that we need to watch go forward. And then finally, yes, so the Vegas event, we've got to 50,000. This is kind of where we are at. Yesterday, I created a list of 10 or 11 spots. I will call them on Monday. What I will hopefully do over the next 2 weeks, maybe 3 weeks, is I will get a location and a date. Once we get a location and a date, I will let you know about it. I will let you register. It will undoubtedly sell out. I'm thinking somewhere around 200, 250 folks. It will be sometime in February of 24 after the Super Bowl. That is, so if you want to start planning, February 24 after the Super Bowl, I'm going to get pricing and locations because again, I want to make sure I can control costs where I can. So as soon as I know a location and a date, I will let you know. Right now, it is feeling like a full day Saturday and a half day Sunday. That's what I think we're going to do. But again, as I learn more, you will learn more. So again, folks, thank you for 50,000 subscribers, 5-year journey, 11,000 videos. And again, please take me up on these free gifts. I'll put a link below. You've got to watch them. These events are worth thousands of dollars. So again, check it out. Hey, Josh, Vegas, baby. Thank you for the super chat. I appreciate you. Guys, if you want to help me monetize my second channel, please watch those videos. Watch both of them. That will count for 7 hours of content. I need 300 of you to watch those 7 hours. Again, great value, but I understand 7 hours. But that will get us to 4,000 watch hours, and the daily financial news will be monetized. So thank you very much. Have an amazing day. Bye-bye.